Alright guys, real quick video here. It is November 18th, Thursday night, so I'm going to go watch a little bit of basketball here shortly. But a quick update on a few of these spots that I suggested in Sunday's video, the watch list video, as far as a few potential swing trade opportunities. So with the Amazons and the Apples here, get a whole bunch of squeezes. More importantly, you have weekly squeezes in every major index. So the idea that this bull trend continues into December, January, from a structure standpoint, it certainly makes a lot of sense. So with Amazon here, I think a really simple but profitable approach to swing trading is find an uptrend, find a squeeze. If you can find 2 or 3 squeezes, even better. But find an uptrend, find a squeeze, and then build your position during that consolidation. So in the mastery and the options room over here at Simpler, with the triple squeeze here in Amazon, we're building our positions back here. Should have done it on the flush, but we're building the swing positions back here inside the squeeze, a little bit closer to the buy zone. Then when you get the big push on a day like today, you're already bringing in the profits versus, that whole mental debate of whether or not you should chase it now. So I think tough for me to suggest a new entry at this point, but this is why I try to bring you these ideas. When they're actionable, and when they're setting up and just chopping versus, hey, I got long Amazon 5 days ago, now it's looking good, now let me bring you the idea. So the squeezes are very powerful, and I think a lot of you get a good gist of that. I think the key to trading them successfully is to have the discipline and the patience to take an early entry, sit through a little bit of chop, because once a move unfolds, you're already in a good position here. So I think in the event you would get a flush, you look to add to your position or build to your position, but otherwise, I think the weekly squeeze takes you in towards 3,900, 4,000 or so. So let's see, what do we got here? For the options room, 3,400, 3,370 credit spread, and in my mastery, 3,350, 3,340. So well positioned here for that weekly squeeze, and we're looking for pretty much that domino effect. Daily squeeze fires that could trigger the 3-day, could trigger the weekly. You do have a monthly squeeze here as well. But that's what we're rocking with as far as swing trades. Now, by myself here, I do have an unbalanced call fly with the center strike at 3,700. If we get some of that monthly expiration pinning action, and you look at the 37, let me see. Yeah, you look at the 3,700 strike call, you got a crap load of open interest and volume right here. So in the event we get a decent pin around 3,700 tomorrow, that could potentially turn to a bit of a home run on that unbalanced fly. But the easy trade here is going to be the swing trade. So I think Amazon's looking good. I think the weekly squeeze can take you up towards 3,900 to 4,000. But the key here is to build your position before the move starts. Next spot we discussed on Sunday and during the pre-market prep here this week is Apple. Weekly 3-day daily squeeze. Build your position at the buy zone. Ride the wave. So at this point, a little bit too extended. I don't suggest you take an entry here. I suggest you wait for your next flush if you happen to get one. Weekly squeeze, I think, could take you up towards 165. Maybe even a bit higher. Now, with Apple here, with Amazon here, it's not to say these moves unfold, vertically. So you might have your flush, you might have your consolidation. I just think in terms of, the next 30 or so days, the weekly squeezes should potentially get the job done. So for Gapplebees here, in the options room, we're rocking with December 31st, a little bit of New Year's Eve action. 150, 145 spread, and then in my mastery, a little bit more time here, January 21st, same strikes, 150, 145. So, a lot of times there's a misconception when you sell credit spreads that if you go 40, 50, 60 days out to expiration, that you have to hold on to your trade that long to get your good premium. In this instance, if we catch our move into 165, we're cashing out 80, 85% of max profit. So the benefit here with a bigger time frame squeeze is that gives the trade plenty of time to unfold. But because you're working on a bigger time frame with bigger moves, of course, you're going to collect your premium there. So I think we're up about 3,000 between the two of those there. And then Netflix was a bit down on the day here. Not to the extent I think you look to come and rush in here and buy this. I would look to buy it on a dip to the 21. And I think your daily squeeze takes you through 700 eventually. So, let's see. In Netflix, a little bit of open profit here. December 17th expiration spreads. And let's see. Options room, 650, 645. Mastery, 620, 615. So, simple thought process on all these trades. Find a trend, find a squeeze, plant the seed, and then pretty much get the hell out of our own way. But next idea here, while we continue to watch the other ones unfold, is going to be Tesla. So, for those of you in either of the rooms there, options room or the mastery, probably going to be our next trade here. So, let's remove a little bit of the drama from Tesla. Pretty extreme move to the upside. 250 point flush. It's all completely normal as far as the ebbs and flows of a trend. It's just a little bit extreme here, but you remove a little bit of the drama, and you made a big push off your 21 EMA. You got a bit too extended, and you pulled back to the 21. So when these really strong stocks go through those 2 to 3 to 4 days of short-lived selling pressure, as a swing trader, the question you have to ask yourself, and this is really important, right? So listen into this. When there's a stock in a really clear uptrend and it's really strong, it's really bullish, when you get that flush, the first thing you should ask yourself is, has anything changed? Has the structure of this trend changed? Has momentum shifted? Has anything changed here? In regards to Tesla, nothing changed at all. Still have stacked EMAs. You pull back to your 21, you found support. Still have green 10x bars. Structurally, you just got too extended. You had to pull back to the buy zone. But it holds up really well here. And then on your weekly chart, completely normal. Weekly squeeze fires. You pull back to your rising AEMA. So, my opinion here, Tesla's not done. It's not to say it goes right back towards the highs immediately, but just in terms of structure and momentum, it's all lining up here. So there's a couple of squeezes here. Let's see, what do we have? You had a 2-hour. Nothing on the 1. Is there a 30-minute? 30-minute squeeze here. So, after the pullback to the 21, I love the daily squeeze. You don't often get it. Or you don't always get it, rather. But I think, again, make it simple. Stock's in an uptrend. You pull back to the daily buy zone. You're looking for a good structure here. The daily chart alone, as it stands, is a good structure. But if in this consolidation you start to get a 2-hour, 4-hour, 1-hour, 30-minute squeeze, that buildup of energy under the surface could fire long and trigger the next leg higher. So, in terms of how to play this here, with the Amazon and the Apple, I'm going a little bit further out to expiration, because they were a bit more in consolidation mode on a bigger scale. Tesla here is more so, it's a living, breathing beast, I think. So, what do I do here? And I got some unbalanced put flies that are going to expire tomorrow. A little bit of action. Let's see. Probably monthly expiration, I would think, for December. At this point, there's like, let's see. Yeah, I could rock with that. 1050, 1045 short strike credit spread. Pretty big spread there. Bid and ask. Let's see. $10 wide. Makes it a little bit better. Similar risk reward. Put it this way. I think if you take the strategy or you use a strategy that makes the most sense to you, the idea here, at least in my mind, is the uptrend's going to continue. So I'm going to play around with that this weekend. Potentially try to work a few trades here tomorrow, depending where we open and where we close. But put it this way, we'll definitely discuss this one in Sunday's video. But along with Apple, Amazon, Netflix there, I do think Tesla potentially is the next one to start heading back towards higher prices. So you get a little bit of weakness here tomorrow. That brings in some put premium. So the put credit spreads, they start to get pretty attractive. Of course, calls get cheaper. But the idea will be to structure something here with a good risk reward, looking for the continuation of the trend. So that is what I got for y'all here as we head into the final day of what's been quite the interesting monthly expiration. So, I do hope that for those of you that subscribe and watch these videos, and again, this isn't investment advice, but I do like to share my ideas, and I hope when we're looking at things like the Amazons, the Apples, etc., and just other ideas in general, I do hope it's it's helping some of you, if not a lot of you, find some actual opportunity and putting some money in your pocket. And if that is the case, let me know down in the comments. But otherwise, I appreciate y'all watching. If you haven't already, go on ahead and subscribe, and I'll talk to you in the next update.